Hello, it's your boy Marty, and today I'm going to be answering 4 questions that I believe every new investor should have the answer to. So without further ado, let's start kicking some ass and answer question number 1. So, how much is enough to start with? Well, I'll tell anyone who asks me this that you want to start with money that you could live without. A good amount where you'd be okay with losing. It wouldn't be the end of the world. You wouldn't be thrown into poverty if you lost this amount of money. Because you have to realize the investing game isn't a for sure thing. There is always a possibility you could lose this amount of money. So you want to put in a good amount that you feel comfortable with playing around with. Once you get used to it and once you get a hang of how things go into the stock market world. And then from there, you also want to ask yourself these questions. What are your financial goals? Why are you doing this? What are you aiming towards? Are you saving this? Are you investing this money to have something at the end of your retirement? Or are you just saving this money for, having extra cash at the end of the month? These are very important questions to ask yourself, and this will bring you closer to answering this question. Also, finally, you also want to ask yourself, am I just throwing a big lump of cash into my portfolio, or am I throwing a good amount of cash and then feeding it through the month, every month, once a month? That is something you really want to ask yourself. Am I going to be making monthly payments into my portfolio? Well, not monthly payments, but am I going to be throwing money, my own money, into a portfolio once a month at the end of the month? Or am I just throwing a huge lump sum of money into my portfolio and letting my returns be the money I use to buy more stocks and increase my portfolio? So that's something you definitely want to ask yourself, and that's how we answer question number 1. So question number 2, can we eliminate risk? Sorry to say, but no, we can't. None of us would ever know if the stock market will go up, down, sideways. No one knows. But there is one thing we can do. We can manage risk. Now, how do we manage risk? We diversify. Now, we diversify our money into different securities, such as stocks, bonds, but not just those two. We also have commodities, real estate trusts, gold funds, different types of things we can put our money in. And of course, those different types of securities react in the market differently than stocks and bonds do. So, stocks may be going up and bonds may be going down, vice versa. Bonds may be going up, stocks may be going down. But let's say they're both going down. Commodities may be going up and real estate trusts may be going up. That's how you want to diversify your money. You want to find a way to have your money split into different types of securities, so that way, as long as one part of your portfolio may be going down, the other part may be growing. And that's, of course, the best way to manage risk. You don't want to put your eggs in one basket, because at the end of the day, all that's going to do is going to keep you up at night, because of the level of risk you have in your portfolio is insane. So diversify, find different things to invest in, and not just something like a tech stock. You want to have your money safe in the hands of diversification. Okay, so question number 3 is a pretty big question. It has different answers, so we're going to hear from 2 different economists who share 2 different points of view. So the first economist that I'm going to quote from is Robert S. Shiller. Now this guy is the winner of Reichsbach Prize in Economics in 2013. He believes that the market is actually impacted by people's thinking and fears. So he believes that people's reactions to campaigns, to elections, to news stories actually have a really big impact in the market. And if you look at the market after, let's say, a tragedy occurs in the news, the next day the market could take a hit. Now this isn't always the case, but the majority of the time it is what happens. And it's because people fear of what happens in the future, and they let that fear affect what they do in the stock market, thus causing prices to go down in the stock market. Now, not everyone shares his same point of view. There's also people like Paul A. Samuelson, who actually won the same prize but in 1970, and he created the efficient market hypothesis. Now, he believes that the market is impossible to beat due to the fact that stocks are accurately priced and have already all the available information needed for the stock itself. So this theory actually relies heavily on scientific and mathematical research and discards the belief of emotions having any type of power to affect the market. So there you have it, two different types of approaches to this question. So by all means, take whichever one you want. I'm not really going to weigh in because these guys are a lot smarter than I am, and I believe you should definitely take their points of view into consideration. With that said, we're going to move in to the next question. Okay, last final question I'm going to answer. Do we need a broker or financial advisor to start investing today? The answer is no, you don't. It's not 1985 anymore, guys. You can start this on your own if you want to. There's plenty of different online brokerages and different kind of apps you can do, and you start investing in your phone if you want to. Now, I'm not saying like totally throw those guys to the curb. By all means, if you don't really know what you're doing and you want help in the beginning, you can call up a financial advisor or broker if you want, but you want to make sure these are people you can trust. So at the end of the day, this is your money and this is your future. So with that said, guys, I really hope you guys enjoyed the video. Really hope this has been really knowledgeable for you guys. If you guys have any more questions that you want me to answer, shoot them down in the comment section. I'd be happy to do a video like this again. So with that said, have a great day. Adios.